Precious Metals Summit 2016 in Zurich, and it's getting late now here, our second last interview, but I'm really happy Luna Gold is here. And with Christian Milau, the CEO, which I know for a long time, many years, and a really interesting company because faced some trouble. And Christian wants to give us an insight and an update. Welcome.
Thank you very much for having me. Really excited to be here. We've met several times, and I'm glad to be back with the new company.
Yeah, perfect. I mean, we know each other from Endeavor Mining and True Gold also, and tremendous success, honestly. And as you just said, you were all everywhere bought out, so you needed to have a new company. And Luna Gold looks like a new, great new venture. The company had some problems. Maybe you elaborate a bit how you overcome the problems, and then we dive into it directly.
Sure. We spent the summer looking for an opportunity, actually, when True Gold was bought out, and we were looking in West Africa and South America, and we came across this company. We knew the core shareholder quite well. Mm-hmm. It's a troubled company that had some issues over the last few years, and basically it had a plant that operated for about 4 years. They produced gold and actually had pretty good recoveries. They were mining soft rock or saprolite ore, and effectively built a plant that could handle that material. They ran into harder rock and big boulders, and really the plant could not operate efficiently at that stage. So in that environment, with the gold price falling, they really ran into a cash crunch for a period of time there. Mm-hmm. So in 2014, they ran out of money effectively in a simple way. And a new core shareholder came in at that time called Pacific Road, a private equity fund out of Australia. And they rescued the company effectively, put some money in to recapitalize it. And they basically asked the management to go and do some drilling to understand the geology, understand the rock, do the engineering to actually rebuild the plant, which we're inheriting right now. And we're getting an opportunity to come in and invest. And we put in $2.3 million this summer of our own money, the 5 management team members.
Your own money, that's
our own money.
So you have skin in the game.
Absolutely. I put in $1 million myself. My wife was very excited about that. But basically we came in and we thought we can rebuild this plant for all types of rock, have it ready to go within 2 years, and be pouring gold in 2018.
Fantastic. Let's come to the future, or let's say to the present first, and then to the future. Obviously, you rescued the company, you saved it, and you restored it. So now you want to go again into production. I saw as you said, the exploration you have done is almost 1 million ounces reserves now. So what's the status now today?
So basically we have a 1 million ounce reserve, as you said. The grade has been improved or increased slightly through the work that's been done on the geology over the last sort of 6 months to a year. So we feel that we actually have an interesting project. It can produce about 150,000 ounces a year once we rebuild it, and it will be a $700 all-in sustaining cost. And in any market, that's a pretty good price. It'll give us a good margin to play with and a very profitable company in the current gold environment. So we think this will have a nice sort of 6-7 year mine life as a base project. But what we're really excited about is the exploration upside.
Great, fantastic. If you talk money-wise, I mean, you have the pre-feasibility done. You have to go now in the mine finance or in the construction financing. How much do you need, and how do you want to do that?
Yeah, so our project will require about 150 million of capital, including a mining fleet, to rebuild it. Now, the interesting part of that, it's an 8,000 ton per day plant, and it's the same size as a plant that David and I had been involved with a couple of years ago, which will cost $300 million to build. So this plant already has $150 million of sunk capital that we're benefiting from. So we'll rebuild the front end, get a new mining fleet for $150 million. We'll need a little extra money basically for exploration and some corporate costs. So it could be $170, $180 million we raise sometime in 2017, and then we'll get back into construction around mid-2017.
Great. And as I saw also in your presentation, you have some debt still there, but you have also like almost 300 million warrants and options out. So I presume this is something like a convertible debt, and you're getting rid of that, and through this you have very strong partners there. So maybe those partners are helping you also with the mine financing?
That's exactly it. Our core shareholders, Pacific Road, a private equity fund, they make their returns through equity returns. And when they came into the deal, they paid off some bank debt. So they did take a debt position. They have about 20 million of debt. And ultimately, they took some warrants as well. So as you said, it's like a convertible structure. They will ultimately help us and work with us to repay that debt using their money, which is this convertible instrument, the warrants, and ultimately have a fairly clean balance sheet going into financing. So when we raise that money, ideally you're raising, say, 50% of it will be normal structured debt or debt leasing finance through Caterpillar or Komatsu, and the rest will be equity. So it'll be a clean, more normal structure when we get to that point.
Fantastic. How much money is by now in the bank?
Right now,
Yeah.
it's probably $10 million, maybe $11, $12 million at the moment. So money to get us through the feasibility study, which is another $3.5 million, pay some of our corporate costs, some care and maintenance costs, and then we'll need the bigger financing to do the construction.
Great. I thought you want to be in production by 2018. Makeable?
Yes.
Makeable?
Oh, yes, definitely.
Good.
I mean, we need 6 months for the feasibility. We think the pre-feas is almost at the feasibility level, so we need a little bit more work. We'll get that out around end of quarter one next year. And then we have 18 months, more than 18 months actually, really, to get this thing constructed. And ideally, if we can hit some of those critical path items early, we can actually shorten that period, but we don't want to promise that at this stage. We'd rather over-deliver and under-promise.
And as you are working in Brazil, I think also from the permitting side, that's all not a big issue, right?
Yeah, I mean, that was actually a key consideration for us in due diligence going in, because obviously in Brazil, they've had some issues with tailings dam in the not too distant past. This is a permitted site, actually. It is permitted to operate at 5,500 tons per day. So we're going to move to 8,000 tons a day. And the goal is to do a modification to the operating license effectively. And we've already had that from the regulatory authorities that that's the way we can go. We don't need a new public hearing and a new EIA. We can actually do a shorter, more efficient update to the permit. So we're pretty pleased with that process.
Fantastic. Yeah. Let's assume you are in production 2018. What might be the game plan then for the future? What do you want to do? You have some exploration targets, you have some new ideas?
I mean, we have a lot of internal opportunities and growth, and the exploration on our property we think is outstanding. There's 2,500 square kilometers on our property.
That's big.
We think even within the 450 square kilometers closest to our mine site, there's potential for a bit of a district scale opportunity, maybe a second project even, but certainly to extend our mine life. But beyond that, we have an ambition to actually grow the company. We think a company is stronger with 2 or 3 projects or properties, maybe 2 or 3 jurisdictions, and I think the Endeavour model has actually played out fantastically well.
Definitely.
It was a $200 million market cap company a couple of years ago. It's now $2.5 billion. It's got 4, 5 jurisdictions, I think, at the moment. We see that as maybe a good model for us over the longer term.
Great, fantastic. Then all the best for that. Thank you very much for your time. And we keep fingers crossed that everything works out. But I would say with those partners you have in place already, that should work. And I want to see you in production 2018.
Thank you very much.
Thank you.
Thanks,
ladies and gentlemen, there was Christian Milau, the CEO of Luna Gold. Well, you heard it, 2018, they want to be in production and $155 million. I think that's really makeable, especially with the partners they have already on board. The debt structure will be cleaned up within the next months also for sure, as it is convertible debt. I think that's very important. Then you have a clean and lean balance sheet. They have enough money in the bank to do the feasibility study. That's also important. And then they can dive directly into the construction financing. So exciting times. Brazil is a great mining jurisdiction. Check out the company. Thanks and bye-bye from Zurich.